and on behalf of Devon Funds Management, I would like to welcome you to our video series. We will be hearing from our portfolio managers as they introduce you to the funds that they manage. Today, I have Nick Dravitsky with me, who is the portfolio manager of the Devon Dividend Yield Fund, previously named the Devon Equity Income Fund. Welcome, Nick.
Thank you, Shantae.
Firstly, could you please tell us a little bit about your role at Devon and how long you have been managing the Dividend Yield Fund?
Sure. So I'm the portfolio manager of the Devon Dividend Yield Fund. Now, I've been managing the fund since its inception in December 2012. My background is as an equity analyst, and so I spend most of my time researching stocks that go into the fund. And my overall role as portfolio manager is to choose which of those stocks make up the portfolio.
Can you explain a little bit about the dividend yield strategy and where you invest the money?
Sure. So the Dividend Yield Fund is invested entirely in listed Australian and New Zealand stocks. So it's 100% equities. There are no income products or bonds or credit or anything of that nature. And what it aims to do is invest in stocks that have a higher than usual dividend yield. So the portfolio as a whole aims to have a dividend yield a percent or more higher than the overall Australian and New Zealand market. Now, the rationale for investing in this way is that historically, over long periods of time, focusing on high dividend yield stocks has resulted in very attractive returns. So past performance is no guarantee of future performance, but it's a good place to start looking. The second rationale is that investing focusing on dividends tends to push investments towards companies that have reasonably stable and predictable cash flows. That's not always the case, but broadly more defensive sectors tend to be higher dividend yield payers, and that tends to be because they have cash flows that are backed by reasonably stable earnings.
The fund has recently changed its name and the number of stocks that it can invest in. Can you please walk us through the reasoning behind this?
Sure. So the previous name was the Devon Equity Income Fund. The reason we've changed it to the Devon Dividend Yield Fund is simply to make 100% clear to investors that the fund is only invested in equities and listed stocks. Typically, a fund that has income in the name includes bonds or credit of some variety. We've always made it 100% clear that the fund has only ever been invested in equities and will only ever be invested in equities, but we just wanted to clarify that. The second change is, until now, the maximum number of stocks in the portfolio was 25, and we're increasing that to a band of 25 to 35. And this is simply to provide a bit more flexibility in managing the fund. You don't need to be a maths genius to work out that at 25 positions, the average position size is 4%. I typically don't like to hold positions larger than 6% in the portfolio, and so with that number of stocks, it's quite hard to hold a number of smaller positions, stocks that may be attractive, but you don't particularly want to have a large position. And so this simply gives a little bit more flexibility to hold some of those small positions.
How do you go about deciding what the most suitable options are for the fund?
Well, the first stage in the process is a dividend screen. And so what we do is we rank all of the stocks in the Australian and New Zealand share market, so that's the NZX 50, the ASX 300, plus any other stocks that we have interest in. And we rank them according to their forecast dividend yields. And so that means taking either consensus or our own estimates of dividends of all of those stocks and placing them in order from highest to lowest. Now, what that does is it generates ideas. That's the first stage to determine where we focus our research. But before anything goes into the portfolio, we conduct a great deal of fundamental analysis of it. And so this means building spreadsheet models, it means reading financial statements, it means visiting companies and talking to management where appropriate, and getting a really, really good understanding of the stocks, and then choosing which of those are appropriate to include in the portfolio. And the real focus for the Dividend Yield Fund is finding attractively valued stocks with good yields that ideally are growing, and particularly to focus very clearly on, is that yield sustainable? Is the cash that's actually generated by that dividend, by that company, enough to sustain the dividend going forward? And if it is, then it goes in the portfolio.
Although the fund is an Australasian equity fund, do you still pay attention to what's happening globally?
Yes, we do, for a number of reasons. A number of companies listed in Australia and New Zealand have global operations, so clearly their performance will be affected by comings and goings in the global economy. Also, the global economy has obviously the potential to have material impact on the local economies, and so how far that affects economic behaviour in Australia and New Zealand clearly has an impact on on the companies listed locally, and we take that into consideration. Another element, specifically in relation to dividend yield, is that one of the things that people take into account when looking at dividend yield is the changes in global interest rates, particularly United States interest rates. And so any impact of the US economy on those interest rates and how that flows through to local interest rates is something that we also take into account.
How do you manage currency in the fund?
So around about half of the fund is invested in Australia at any one time, sometimes less, very rarely more. And for those positions, what we do is we fully hedge the Australian exposure. And so we do that by using foreign exchange contracts with the major trading banks. And what that does is it means that the movements in the Australian dollar have no impact on the value of the fund. Now, we do this to reduce volatility so that clients invested in the fund can have as little volatility associated with their investment.
Lastly, why should somebody invest in this fund?
I think there are three key reasons. The first is the investment style. Investing in high dividend yield securities over time has proven to be a very attractive way of investing in equities and generating really good returns over a very long period of time. Particularly over extended periods, the contribution of dividend to total return is very, very, very large and is often still underestimated. The second thing I'd say is that for investors who want to invest in equities but derive an income they can use, so generate income from the portfolio rather than reinvesting it back into the stocks, this portfolio generates an attractive running yield, and so investors can, if they choose, harvest that income. The third thing I'd say is simply that, as with all the other funds at Devon, it benefits from the fundamental, rigorous research style that we have here, and it's informed by the collective experience of the overall Devon Funds team.
Yeah. Thanks for joining us, Nick. We really appreciate your time. For more information regarding the dividend yield or any of the other Devon funds, please continue on to the Summary of Funds page by clicking on the below link. Thanks for your time.